Good afternoon, good morning, or good evening, everyone. We're going to start pretty soon. I wanted to give you a heads up. We'll be waiting for maybe a couple extra minutes just to make sure that we have as many folks as we can have. But do not worry, we should be starting in 2 minutes. Thank you. All right, maybe in the interest of time and to be respectful of all of you that joined early or right on time, I want to get started a little bit. Welcome everyone to our Valutico weekly webinar. Today, what we're going to be doing is mostly use a valuation we did recently publicly of the German retailer Aldi and use that opportunity to walk you through all the different steps that the platform can perform and how we arrived in literally minutes at performing that valuation. So today, I'll be sharing with you a little bit about Valutico as a company, about the platform, but really I want to spend most of the time getting into the nitty-gritty of how did we do that valuation, how could you do a valuation such as the one that we're going to share, and eventually save some time for Q&A, any comments, anything like that as well. So without further ado, let's get started. My name is Matthew Gerville. I'm part of the Valutico team. I actually joined early last year, and I'm based in the US, where the company has expanded tremendously and is one of the nearly 30 countries where we have a presence. But historically, Valutico was actually started in Vienna, Austria, and it boils down to a need that was identified about 4 years ago in solving the pain that is doing a business valuation. Our founders had heard the sentence, business valuation is more art than science, and sort of from doing it themselves, but also hearing that sentence over and over again, they realized that they disagreed with it. They realized that really, when it comes down to it, a valuation is actually a little bit of like a craft. It's somewhat of a hybrid between art and science, and there was a better way to potentially do them at scale with quality, but yet speed and accuracy at the same time. So between that realization and the understanding of the market for valuation and its evolution, which you can see on the right-hand side, more and more financial data being available, spreadsheets not being able to cope with that amount of data, robotic process automation or RPA becoming more and more widespread in other functions of finance, and essentially um, all the other macro trends with regard to remote work, collaboration, etc., all of this led to the creation of Valutico and its launch at the end of 2017. Today, we serve about 150 customers in 26 countries. I feel like we need to update this slide almost every day. I think as of yesterday, we are in South Africa as well, so make that 27 or 28 countries. The goal is for tomorrow to be the global standard in how people do valuation. We have a lot of ways to go. There are thousands of professionals, such as yourselves, that perform valuations every week, every month, every year. And so we want to make sure that whoever needs to gain that productivity edge, whoever needs to gain that data edge, we can end up in your hands. And so there's a lot of room for us to improve there. Um, I'll go pretty quickly, but the foundation of Valutico is really around the idea that while we want to leverage technology for what it's good for, saving time, yielding productivity, efficiency, and accuracy, we want to make sure it never takes away from your ability as professional service persons to exert your opinion, to exert your. All right, so back at it. I think I've bored you enough with PowerPoint slides. It's probably time we move on into the platform. Just again, some of the big names that trust us right now, some of the largest accounting and audit networks are working with us. And we hope really that not only from a global perspective, reaching into new markets, geographically speaking, but also new use cases. We recently started having venture capital firms and private equity firms join us as well. And if any of you are in that situation where you do not represent the typical use case of valuation, we would love to hear from you. So by all means, please get in touch with us. What we'll do now is actually go directly into the Valutico app. As you may have garnered from the discussion earlier, this is obviously a tool that is available in the browser. It doesn't require you to download anything. And what that does for you is it really enables you to always work on the most recent version. We make updates to the data, obviously, but also to some of the features and functionality on a regular, recurring basis. And so by delivering the service as a cloud-based application, you are getting sort of the best of both worlds with regard to 24/7 support yeah, yet at the same time having the flexibility of something where a lot of the calculation are done on our back end, and you can still do it really on any sort of device, including mobile devices. Now, when you land here, we are on the landing page of a signed user in Valutico. Now, obviously, my homepage is going to look a little bit different from yours, granted that I have a few additional perks, such as the impairment testing module, which is currently in beta. Please feel free to reach out to us if you're interested in that. It's currently not available publicly. And then something else I want to call your attention to, if some of you in the audience are actually advisors on transactions and are looking to grow your business, we have a feature right here where you can actually collect interest from business owners that have contacted us to get a preliminary evaluation or a quick opinion about how much they could hope to garner from a transaction. And so you can see right now my profile being set at global. I see quite a lot of them, but this is a perspective on what we call my Valutico, and the amount of small business owners, and actually some of them not quite that small, that have reached out and are looking to be helped in a transaction. Now, back to the main screen, you'll notice we have three main modules, and I'll walk through them in right to left order for reasons that will become apparent in a second. Our most commonly used module is this private market one right here on the left, and this is the one we will use to value Aldi, as we did in that LinkedIn post that probably attracted you here. Um, that module is the more robust one that contains all the features and all of the inputs that you would want to do in the case of a private company where you, as an expert and potentially as a provider to that company, will have all that data. The module in the middle of my screen right now, capital markets, is actually one that is extremely helpful for investment managers, or if you're doing just a little bit of strategic research and you want to see a valuation perspective on any publicly listed company anywhere in the world. So our data set has about 50,000 listed companies. Obviously, that number moves every day with IPOs, mergers, and other things like that. But this is a way, and we'll do one in a second, to literally be one click away from seeing how a public company could be assessed. And then finally, we'll play with that a little bit, which is that Valutico resource module, which is a very quick glance at some key indicators such as trading multiples for certain industries or risk-free rates in various countries, et cetera, et cetera. And so in this case, what I'm going to do, and let's say I'm in the US and I want to see about Canada, or looking to expand there, for instance, this resource module will give me access. Hey, hi. So what we have here in that resource module is essentially a very quick way to get that information in one centralized location. I know most of you deal with this information, things like the risk-free rate, the corporate tax rate, things like that, and perhaps you depend on multiple sources to find that information. This is our way of making that easier for you, just one quick glance. Now, we break down that information by country, and that's obviously something that can be, in some cases, um, pushing you towards navigation, towards looking at different countries one after the other. But overall, you'll find that lots of the information that is here will be actually transcribed when it's specific to a project. You will find that information woven in directly your workflow. Now, the trading tab right here is actually, again, for Canada in this particular case, looking at the trading multiples of publicly listed companies across different industries. And so this is something that you will, again, see in our actual valuation workflow. You'll see where that data is coming in and how it actually becomes directly relevant to any particular project you're doing. And then finally, we have here the transaction tab, which likewise will be something that will be funneled back into the application. And so if you just wanted a quick overview of what are roughly the going prices, if you will, in terms of multiples in one particular country, that is where you will find that. That is in the resource tab. Now let's head back home to our main dashboard. And what I think we could do is I'll walk you through how to create a private valuation. And more importantly, I will reopen the Aldi project that I did for the original blog post, and we will walk through every one of the assumptions that we made and actually deconstruct the options that were given to me and see kind of how we arrived at it. In a case where you don't work off an existing valuation, like we will in a second, you would actually create a project very simply right here by giving a company name. So Acme being a classic um, catch-all name for American companies. You would want to indicate the location of the company, and that obviously will actually affect what we saw in the resource tab. The peers that we will recommend, the industry multiples, etc., will be based mostly on the region in which you're doing that valuation. But there's flexibility. You can always change some of those things going forward. Then from an industry perspective, you have two options really that are available to you. You can either search it, and so here machinery, and you can see all the different subcategories of machinery, for instance, um, or you can actually navigate using two very commonly used taxonomies, the NACHI and the NAICS. And so really up to you. We know some folks have a degree of comfort and can recite NAICS codes by heart. If you prefer to just do a simple query and search by keyword, you obviously have that option right here. Then the only final thing we will ask you to do to create a new project is to allocate a currency, obviously, and then the annual revenue estimate for the company that you're trying to value. Everything else is optional beyond that. Now, when you're looking at the two fields that are below that, they're both optional. What they do is that in the case of similar public company, and you can see actually right there, since we're going to do Aldi, let's try to find a similar company in a retail space. This is to anchor our peer recommendation engine and to make sure that we seed the recommendation with at least one name that you are very comfortable with. And that way, when the engine actually recommends 12, 15, or 20 additional peers, it is going to be grounded in that decision you made right here. And then finally, for some folks that sometimes may need to do valuations that are backdated, maybe for tax purposes, or impairment testing for that matter, this is something that we have enabled where you can actually choose the date at which the valuation will be anchored to, and obviously that changes some things with regard to trading multiples, etc., etc. Now, because obviously we've done that valuation already for Aldi, I'm going to show you how you can really recover some of your prior work here. And you can see some of the many valuations that I've done over time. Aldi is right here, conveniently with starting with an A. I don't have to go too far. And you can have that information right there that that valuation was originally done on March 1st, 2021. When I click on this, it will take us all the way to the end result, and I will navigate us back as if we were creating that valuation from scratch today. So if you've read that post that we made, you already know sort of our findings and where we recommended the value land. So instead, what we'll do is we'll navigate back to essentially that workflow you see up top, where we start with the company information, which we just entered. And the first real step of work is going to be what we call the qualitative assessment. So let's go into it and get a qualitative assessment done on Aldi. Now, being that this is a case where we already did the valuation, you'll see all of those weights have already been adjusted. I want to walk you through what they mean and why we've made some of the decisions that we've made so far. The intent, I will zoom out a little bit, by the way, so you can see a little bit more. The intent of this practice is really visible at the bottom of my screen right here. We want to apply a certain cost of equity premium according to our cost of capital method, which is the CAPM model. And we want to apply a discount to trading multiple when we're going to compare Aldi to other publicly listed companies. And both of those things are a result of the overall risk factor that we assign to the company. So every lever that you find here, and they're neatly grouped by topics, whether it's general, whether it's about the market, about the management team, etc., etc., every one of those factors actually plays a role, and you can see how much of a role it is on the right-hand side with the weight of these parameters. Every one of those factors plays a role into moving the risk factor. So in this case, Aldi is obviously a sizable, it is private, but it is sizable. So I opted when I did this valuation to go from a neutral ranking of 3 all the way to ranking it as a large company. When I do that, you should see up here, as well as at the bottom, how that affects the score right here. And this is obviously, reflective of a discount for size or discount for lack of marketability. All those different factors that you normally sort of have a soft perspective on in your head, they're reflected in a much more quantifiable and more importantly documented way, so that if you have multiple folks in the firm doing that kind of work, you can see how they arrived at recommending, for instance, a cost of equity premium of 3.1. So we haven't really reinvented anything here. All the factors that are listed on this page, and I'll walk you through a few more of them, are things that you as professionals are already looking at. What's new is the ability to view it all in one page, to document it, and actually to have traceability. We issue an audit trail. If I were to make a change here, that would actually be reflected in a document that shows me that on today, March 18th, I made a change to this particular rating, and this was the impact to my cost of equity premium, etc., etc. So some of the factors that we take into account, obviously things like market size for grocery retailing, that's obviously going to be an enormous market. Market growth, on the other hand, is probably less attractive than some of the other markets that are out there. And then in terms of market share, Aldi may be private, but they are in the top 10 largest global retailers. Therefore, I wanted to give them credit for that and rank them relatively high. When it comes to competition, this is obviously a highly cutthroat, highly competitive market. So I wanted to represent that. I could have frankly gone even a little bit more aggressive here and mark it as really high. Exposure to business cycle, we know that for a fact. Obviously, this category is affected quite a bit by the economic cycle when people have higher unemployment, spend a little bit less on groceries, maybe go down market to different kind of retailer, etc., etc. Now, other factors that are maybe a little bit less obvious are going to be around the management team, not only their quality overall, but also the strength of the bench, if you will. And in that case, with a little bit of research that I did on my own, obviously you would know that a lot better if they were your clients and you were doing this work yourself. But I wanted to actually say that Aldi has a relatively strong bench and does not depend too much on one or two individuals. Therefore, the reliance on key persons, I mark that as relatively low. On the sales front, things that all professionals use to M&A. That's actually my background. This is always something you want to do as part of your diligence. How much do they rely on the top customers? Is 80% of the revenue coming from 20% of the customers? Or is that a little bit more of a healthier customer base overall? And so this is what I wanted to reflect. Right here, customer lock-in. I think there is very little lock-in or even loyalty necessarily in the grocery market. That's why I wanted to reflect that as very low. So overall, the intent here was to try to represent our understanding of how Aldi operates, and by modifying those factors right here to eventually present a credible perspective on the overall risk factor, which yield eventually a credible cost of equity premium as well as discount to trading multiple. If you have any questions, by the way, feel free to use the Q&A function, or I believe there's also a chat function that it is activated. And so feel free to put it at any point in time. I will try to keep an eye on it. Obviously, I'm a little bit distracted by keeping an eye on the main screen, but don't hesitate. When you're done with the qualitative assessment, you can follow up here again. We're going to move into the peer selection phase. And so in the peer selection phase, if you recall, I had actually used Kroger as an example of a company to preload in our data set. And that work was obviously done a couple weeks ago, but the set of peers does not evolve that much, if at all. What I did at the time was really make sure that I curated a somewhat global, because Aldi is a global company. I didn't want to over-represent, let's say, Germany, where Aldi is from. And I wanted to curate a somewhat global representation of retailers that have a similar profile to Aldi. So retailers that I think were initially included and I removed were things like the Home Depot, which is a hardware store in the US, and others that I was less familiar with. But really what you do here, this is the end result that I arrived at. But in the process of doing that, what you would want to do is look at the set that we provide, and based on your own understanding of it, as well as the little hints that we can give you here in terms of description, is to decide which companies to add or remove. And so let's say that in this case in particular, we'd like to remove this Belgian company for whatever reason. You would use that menu right here and say, I wish to remove this company. When you do that, especially as you remove more than one, what you end up doing is you curate a set of peers that is more relevant to your particular target. And therefore, the median that we extract from that set of peers is going to be hyper targeted to the company you're trying to evaluate. And so in this case, you can see that the median of the various multiples we provide right here is readily available. And here you'll find that number that we calculated in the qualitative assessment. Our work in the qualitative assessment recommended that we apply a 19% discount to trading multiple. So that is why the platform is doing it right here. If I decided for some reason that maybe for revenue multiples, I wanted to apply a less steep discount, I am still totally empowered to do that myself, and I can hard code a lesser number right here in terms of the discount, or hard code an actual number by hand right here and say, I would like to just have a 0.5 times sales multiple right here. Now, interestingly enough, Aldi is a pretty uh, easy to box in sort of company. In other cases, you may have a company that sort of fits between two buckets. Is it a digital entertainment company or a software company? If we're thinking of, I don't know, Spotify, for instance. And so what you can do here is use that little plus sign and add an additional industry. So let's see if there's anything else that we could look at that might make some sense here. Um, and let's just go with food products maybe, just in case, to see maybe if Aldi should look to do vertical integration and start actually being maybe producing more white label. And so what I view now is three perspectives. I have my perspective on the median of the peers that I selected across EV over sales, EV over EBITDA, EBIT, and net income. And I have the perspective of what are the trading multiples for the industry overall, as well as that other industry that I added. And from there, I can really decide what I want to do. Now, I showed you how to remove a peer. I showed you what we do with the peer data. Now let's look at how we can add some. So let's say I want to look at companies. I'll go straight into the sub-industry actually and see if I can find some additional retailers. Food and staples retailing. And maybe I feel like I have not really represented the Asian market. I'm not actually quite sure if Aldi is present in Asia, but we'll see. This is the fun of doing a live valuation without a safety net. And so let's see what we're finding. I looked for publicly listed companies in the food and staples retailing in Japan, just to kind of see, get a perspective in case Aldi is in those markets. And I find 106 companies. I can view the list of results right here. And it looks like Lawson, which is, I believe, a Australian company, may be also listed in Japan. So maybe I will just include them. Now, once I've added a company, or if I look at just the set that was already there, I can also do a little bit of a deep dive. If I wanted to look at Coles, also an Australian company, and see where is this data coming from, Valutico is very transparent about where our data is coming from and what date, more specifically, and how we did every single calculation. Some of our clients that are using work for IRS compliance or even FCA compliance sort of work want to make sure that in the output that they provide, there is a full traceability of how every number has been calculated. And so that's what we provide right here. You'll find the method that we use. Obviously, multiples are very simple divisions that we make, but nevertheless, we want to be very transparent about how we arrive at this. If I wanted to also perhaps make a more educated guess or a more educated selection when it comes to my beta, be it levered or unlevered, the levered aspect will come into play on the later stages when we decide to tweak maybe the tax rates and things like that. But I also have the ability to do that, either at the scale of the entire set of peers and look at my beta right here, including the median for the various industries I've selected, where my peers are located, and where we have selected to position ourselves. Or I could look at the beta at the perspective of one single company and see the beta calculation for them, which we use a rolling 5-year monthly average to perform, by the way. That data is also downloadable if you wish to do some analysis on your own. The final thing I usually do is before I move on from a set of peers, they look good at first glance, but maybe something is going on there that I would want to make sure I catch. And so usually I go into that benchmarking tab right here. And what the benchmarking tab will do is visually show me the rate of growth and some measures of profitability for all of these companies across different time horizons, so I can see some of the momentum that's going on. And I could potentially decide to remove some companies. Metro here I see has had tremendous growth over the past few years. but we're still in the low double digits. We're not looking at something like 50% growth, or maybe they made an acquisition and the multiple might be thrown off a little bit. So I opted to keep them in. In some cases, I do a lot of those demos on software companies, and you'll find really very, very wide ranges with profitabilities that are extremely negative, as well as sales growth that are, in double, triple, quadruple digits percentage wise. And that gets a little bit more cumbersome, and you want to make sure that you can spot any potential outliers and that way make that decision. For instance, in this case, let's say a company has invested a lot in capex, really stands out. You can see the median is 2.6. These guys, Lawson is actually more than doubling that. I may actually decide to remove them just on the basis of that. They may not seem like a perfectly good match. Once I've done that, I'm sure you can guess where we're going next if you are following along the top of my screen. And so we'll move on to financial projections. Now, when we get to financial projections, and this was actually a little bit of a complicated one, given that Aldi, albeit as big as they are, provides very, very little information about what they do in terms of financial performance. And so we had to use the Valutico estimates. Valutico estimates our perspective on creating a simplified P&L, cash flow statement, and balance sheet, essentially all of the key items that you need to do a DCF, by extrapolating the data from the peers and the analyst consensus estimates that come with them. So in reality, the only number that I entered initially when I made this Aldi valuation was this right here, 120 billion euros of revenue. Every single number after that was created automatically by Valutico by simply using the rate of growth of its peers. And so in that case, you can see that for 2021, we're estimating that the company will get to about 120.7. And I can go to the benchmarking tab right here and see where that comes from. It comes from my little sales tab right here, the median estimated sales growth of my peer group. Now, for the sake of flexibility, we allow you to change that however you see fit. If you think Aldi is not being affected as much as its peers, and you want to say maybe, let's give it the 1% right here, you can actually do that. When I do that, you'll notice that numbers switch from being green, which is an extrapolation from Valutico, into being blue, which is data that you've entered yourself. In this particular case, we had done a little bit of research prior to valuing the company and found out that we estimate the gross margin to be at about 3%. And so I actually had played with the numbers. This is where you'll see a lot of blue on these lines to reflect the EBITDA, the EBIT, and net income that would be consistent or at least credible with a 3% gross margin case. Now, when I said 3% gross margin case, I use the word case. I could really say scenario, and this is actually what we did. Is we represented two different scenarios in which to value Aldi. One is where we aggressively by hand fed into the model some new assumptions representing what a 3% gross margin might look like. And another one was actually just to take always the analyst consensus estimates and stick to those numbers. And so if I go back to that other scenario, you can create unlimited scenarios, by the way. Maybe you are doing a scenario of management case versus synergy case in the case of an acquisition. Maybe you're doing a different scenario in terms of different growth estimates for a particular company that are not tied to an acquisition or something like this. But you have the ability, just at the click of a button, as I just did, to switch between scenarios. And so this is my peer case out of March 9th, 2021. And you can see here that actually my EBITDA margin is quite a bit higher than the one I had in my other case. They will obviously yield different valuations, and so you have to make sure we document it everywhere, that when you arrive at the valuation, just check which case you're actually valuing at the moment. Now, a couple other nifty aspects of this platform when it comes to the financial projections. Not only do we seed everything with the peer data and let you adjust as you wish, most of the adjustments can be hard-coded as a value, such as the amount in billions of euros right here, or hard-coded as a percentage of a margin, or as a rate of growth for revenue, really making it flexible to represent your assumptions however you like to build them. You can do a couple of other things. One is adjust the length of your forecast. In the US, especially in industries like software, we tend to do pretty short forecasts, 3 to 5 years. In maybe capital intensive industries, you would want to do longer forecasts, 5, 7, 10 years. We give you that flexibility right here again at the click of the button. And as I add those forecasted year, 2026 and 2027 just showed up, you can see just like that by magic, everything is already pre-filled for you, again, based on assumptions that are grounded in market data. This is not a simple straight line estimate. Wherever we can, we use actual market data to seed that information. Um, Couple other things you can do before we move on is download that data and work on it in whatever tool you're most comfortable with, whether it's Google Sheets to collaborate with many other folks, whether it's Excel or whatever else you're using. You can do that very easily and then eventually re-upload whatever work you've done, and Valutico will ingest that information back and represent it as a new scenario essentially. So very simple right there. And then eventually, once you're comfortable with the assumptions, I always recommend checking the validation tab, which is sort of like a plausibility check. Shows you various different dimensions or derivative of the numbers that you've entered as a way to see if anything really seems outlandish. For instance, right here, I think I had played with the capex assumptions, but nothing strikes out as extremely out of the ordinary. But in some cases, you'll see a figure right here that will spike a little bit, maybe because of an analyst consensus estimate that drops in the out year for a particular peer or something. This is your perfect page to spot those sort of bumps in your model and smooth them out. Now, if you're doing a project that's obviously a little bit more involved and you are working directly with the client, this is not like a pitch meeting, you have actual data about a lot of their operations and maybe their cap structure, the cap table and capital structure, you can make some adjustments in there as well. Here we have pension obligations that were not represented. We probably could have added some. I don't have the assumptions off the top of my head, but I'm sure Aldi has some pension obligations. I could really add any other sort of maybe things that I would want to do. Maybe I want to write an ESOP plan or something like this, and eventually that gets reflected into the net debt bridge that we'll see in a couple pages. I don't see any Q&A or any chat comments, so I will keep plowing forward, but don't be shy. Feel free to interrupt me at any point, and I would be happy to take your questions. I know this is a lot to digest in very little time. As I click on next, we're obviously headed to the transaction tab. Again, if you're following up there, this should be pretty self-evident. And the transaction tab will work in a manner that's very similar. You should feel very comfortable with it by now already because we spent enough time on the peer selection tab. The dynamics of it, the user interface is very, very similar. Valutico makes some recommendations and will give you 10, 15, 20 different transactions that the platform believes are relevant. And that seems pretty much on point right here. Lots of acquisitions. In the past, maybe I would want to remove some of the older ones. In the food and staples retailing. And lucky for us, lots of great information here, lots of multiples that are available, etc., etc. The mechanics from here are exactly like the peers. Maybe I want to remove this transaction because it is now almost 13 years old. So this is actually perhaps a little bit too old to be particularly helpful. This one as well. And so the removing feature, extremely simple. If I wanted to add some transactions, this is something that's not done very frequently because we don't often know by the name of a transaction by heart, but you could do a simple search right here. Or more often, what you'll want to do is do a filtered search. And what you'll notice here is actually a feature that is yet to make it, but will soon appear on the peer transaction, on the peer selection tab, is a full text search. And so right here, you can see that we have about 800,000 precedent transactions that are available, including over 150,000, I believe, where multiples are available. And what you can do is try to narrow down quite a bit. And so if I'm looking at transaction in the food and staples retailing, and let's say I want to look only in the past 5 years, so 5 years would be 2016, mid-March, and I'm going to look at a set that is about 300 transactions. And now if I wanted to narrow down and maybe look at convenience. Maybe Aldi is looking to expand into the convenience store. And so I'm going to add the keyword convenience here. And just like that, we narrowed down our search from 300 plus results to just 87. Now, maybe I want to remove anything that was a minority interest taken. Now, 50%, 51% and above. And maybe also want to remove deals that would be too small, less than 100 million. And just like that, we've narrowed down to 14 transactions that could be quite interesting right there. So I am not, I believe, familiar with most of these, but this one is relatively sizable. It is in the US and it is in the right category. So I'm going to add it. We're looking at performance food group. And then once I've added it, I can do a quick double take and make sure that I'm actually really comfortable with that transaction by clicking on the details tab. And right here, I will find a snippet of description of that particular transaction. And that way I can read a little bit more through it and figure out, do I actually want to include it? Is it really a relevant transaction for my particular project? Eventually, once you've built a list of transactions that you're comfortable with, the object is obviously the same, is to find the multiple that you are comfortable with. In this case, we provide you with the median. We suggest a discount or a premium, as the case may be, and then we let you decide really what you want to do. And so let's just go here, manually rounding that up to 0.5, maybe doing a slight discount of 5% on the EBITDA multiple, 5% on this, and not sure why I add this original very steep discount, but given that Aldi is, I believe, less profitable than its peers due to its discount status, I want to apply a steeper discount right here. Once I'm comfortable here, a quick glance. Oh, you know what? I happen to work in the retail industry. I don't, but let's pretend. And I know of a custom transaction. I know of a transaction that is not publicly available. And so this is actually Matthew Inc. Grocers Limited that acquired, hopefully a typing company, Hackney Grocers in the US, etc., etc. And so what you do here with this simple mechanism is if you have a particular expertise, we have a lot of clients that say, I do a lot of healthcare acquisition, and so I have a lot of data from my industry that nobody else has, that CapIQ doesn't, that PitchBook doesn't. I want to be able to import that in. This is how you would do that. You would add the information about a deal that you know, and that way, obviously, the more I add, the more it'll move the median and also eventually, obviously, appear in my report that I can share with my clients. And so we've done it. Now that we have completed that final step, the bulk of our work is done. There will be a little bit of fine tuning that's available to us, but really, by and large, the work has been finished, and we're going to get to evaluation. Now, this valuation is, because I fiddle with the numbers a little bit, might look a little bit odd, but directionally speaking, we should be looking pretty good, especially when it comes to the multiples-based approach. I played with the P&L a little bit too much, especially giving Aldi a lot of credit for profit margins way above the industry averages, and therefore my income-based approaches, DCF, and even the equity-based approach are going to be relatively rich. But when you look at the trading comps, we have a very nice, very narrow range right there that you could feel very comfortable is likely where the company value would net out if they were to go public. Now that I've done that, I have my range right here, and I can actually go and dive a little bit more into each of those methods and see graphically in some cases, or in tabular fashion in others, how exactly do we arrive at those estimates? So right here is my net debt bridge, which I added 0 for the ESOP. That would obviously show up if we had created an additional item on that table. Right here is the full breakdown, and I will zoom in a little bit. I was zooming out earlier so we can see everything. Let me come closer here. Here's the full breakdown of how we arrived at our WACC of 4.5%, which is really low. But upon verification, it is common in the grocery and high volume retail industry to have pretty low WACCs. And so you can see all the different assumptions that we made. And by the way, if there's any of them that you don't like, you're just one click away from adjusting them right here. Now, for the sake of discussion, we'll bypass that and just assume that we're pretty comfortable with this, including our gearing. I think the gearing is right here, our target debt ratio. And so this is a feature people often ask about. Then we can see sort of the full build out of the cash flows that yield our DCF, including the sensitivity table. Obviously, because of our very low WACC, you can see here we have this number right here. It's just a limitation of the growth model that's used by literally everyone in the industry when you come to very, very low WACCs that overlap in the sensitivity table with the perpetual growth rate. And if there's a method that I don't particularly like, in this case, actually, I kind of want to hide the DCF because we have so little information about how well Aldi is doing. We have so little information about how much of their cash they're spending in capex and things like this. I may actually opt to hide my DCF valuation. And when I do that, it's not simply going to remove it visually. It would, if I had not hard coded a range myself, it would actually restrict the range a little bit and give you that more narrow sort of field that you usually, obviously want to go to clients with something like plus or minus 10 or 15%. If I look at other methods, obviously going farther down the table, I'll see all the traditional methods of representing the information. Your trading multiple as a nice little histogram chart. And then our transactions are going to be represented right here. And all of this is obviously something that you could click on to see more details, etc., etc. When you're happy with the results, and if you feel like you don't necessarily have to do a lot of adjustments with the various parameters around right here, you could actually do two things. You could stop right here at this web version and share this. This is actually what we did. Those of you who consulted the blog post and read through it, you may have seen a link that landed you on this page. This is exactly how you would accomplish that. You would copy that link right here, decide to make the valuation public, and then if you change your mind and want to do some more work on it and you don't want anyone to access it while you're working on it, you turn it back to private right here. Now, one thing to note, we also disclose right here, we're looking at the peer case. If you remember, I had two different scenarios. If I wanted to show the 3% gross margin case that we created, I would just go back to financial projections, reload that scenario, and then you would just be one click away from recreating one. So that's one option. The other option is going to be to do an expo. If you work with clients and you would rather send them a Word document or PowerPoint rather than sending them to a web view such as this, you can do that as well, and I'll show you in a second. One final thing I wanted to show you on that page, because something that actually is a huge time saver, whether you are in private equity or doing LBOs occasionally, or you just want to compare just to get a perspective on what other bidders potentially could be seeing, we actually provide an LBO model, and you'll see it at the bottom of my page. The LBO model comes with its own set of parameters, which I can adjust right here in terms of the targeted leverage, as well as the exit and entry multiples. And so this is very flexible. This is something you only do on that page. We don't let you or ask you to build a separate financial projection. We only manipulate from these simple parameters right here. So from an export perspective, we offer multiple languages, basically every language that our current clients are speaking, and we'd love to add a new language if we can add a new client that requires it. But what I did is I created already a PowerPoint version. I will share my overall desktop in order to do that. And I will show you kind of what the end result looks like. Actually, let me share my PowerPoint. All right. So the outcome that you have here is a document that would actually be branded to your colors. If you join us and provide us with your logo, etc., you would have your information represented in there, the colors that you prefer, the logo that you prefer. And then one thing to point out is that I know sometimes, before going to a meeting, you need to make a quick adjustment, remove a peer because it might offend the client, or maybe change a number around something. Everything that's in there is actually editable. None of this is pasted as an image. And so if you wanted to not show accounts payable for whatever reason, or if you wanted to potentially make some adjustments here and remove that sensitivity table or make it bigger or smaller, you can actually do that. Again, everything is easily editable. And we also provide, in a format that's even more customizable, a Word export. And so in the Word export, you can have as many placeholders as you like. Likewise, things are editable. And we allow you to essentially tell us, for instance, I would like to have an org chart. We don't provide the org chart, but we provide the placeholder. That way, the analyst or whoever is doing the work on your team always follows a particular format, and we produce an output that flows with how you normally work. So that's the gist of what I wanted to show you today. I will go back to the platform and I will pay a close attention to the chat and the Q&A section. Let's go back to the valuation screen. It's a little more interesting in the export tab. Any questions, comments? Let me see, none in the chats for now, none in the Q&A. Was that clear? Let me see. I believe we may have. All right, well, I'll show you a couple more things. And since we have more time, we are essentially done with the demonstration. I'll show you a couple of additional things if you have time to stick around. A couple things that are nice. Right here, you have the support feature built in Intercom. And so what this allows you to do is to ask any questions as you're using the platform. You can essentially look for answers that have already been provided, sort of like an FAQ aspect. You could schedule a demo from that tab, or you could actually send a message to our support team. We have support team in North America and in Europe, so we cover really a lot of the time zone in which you work. And we also pride ourselves in everyone on the team being not only capable of supporting you from a technology perspective, but also from a valuation perspective. And so if you have technical questions with regard to some of the methods that we're using, etc., this is also something that you can ask via this forum. And then another neat feature of the platform, which is something that some of our clients really love to use, is we have a means to let you provide feedback. And so if you use this little widget right here, you can actually say, I would like the LBO model to be based on EBITDA multiple instead of EBIT. And you submit the insight, and because we build our features based on your feedback, we will essentially aggregate all of the different points that have been made, and our product team uses that as intelligence to make a product roadmap decision. So this is also a nice feature that our clients have. Your voice really matters to us, and we really want to make sure that we represent your wishes in our product roadmap. Speaking of product roadmap, I will show you a little bit of an overview right here, some of the things that are coming up. There will be some major improvement to the UI and UX coming up in the next quarter or so, but also some more invisible sort of things. The machine learning P algorithm is getting better every month. And so from initially seeding with just one company like Kroger we did for Aldi, up until giving you a bigger but also more targeted list of recommended peers, this is something that's constantly improving. The increased customizability, this is something that's going to show up, especially in areas such as a qualitative assessment, where you'll be able to decide how much value to assess to each of the different components of it. And then other aspects such as core product augmentation, better collaboration beyond sharing simply a model, doing access to APIs, better data input, and also an ESG model that will come up for those of you that ever do environmental, social, and governance factors in your valuation. So let's see, do we have any more? We still don't have any questions in the chat or in the Q&A. Let me know if anything comes up. Otherwise, I'm happy to give everyone a little bit of time back And I apologize for the technical glitch we had in the beginning and invite you to reach out to us. You can go to the website, valutico.com. You can send us an email at sales@valutico.com or info@valutico.com. And by all means, we want to hear from you, whether you're already a client and you need more help onboarding, you want to join the beta for one of our new upcoming features, or whether you're interested in learning more. We would love to spend time with you, do a personalized demo, walk you through any case that you'd like. And so, with that said, I wish you all a fantastic rest of your day and look forward to seeing you in our next weekly webinar. Thanks, everyone.